Hey everyone, welcome back to the channel. When it comes to investing, few names carry as much weight as Warren Buffett, known as the Oracle of Omaha. Buffett is one of the most successful investors of all time. With a net worth in the tens of billions and decades of outperformance under his belt, he's someone we can all learn from, whether we're just starting out or managing a growing portfolio. In the next few minutes, we'll walk through Warren Buffett's most important investment tips, ideas that are simple, practical, and proven to stand the test of time. Let's dive in. Tip number 1. Invest in what you understand. Buffett's golden rule is simple. Don't invest in businesses you don't understand. He calls it staying within your circle of competence. If you can't explain how a company makes money or what its future might look like, you're probably better off staying away. For Buffett, deep understanding leads to better judgment and ultimately better results. So before you invest in that trendy tech stock or hot new startup, ask yourself, do I really understand this business? Tip number 2. Think long-term. Buffett once said, our favorite holding period is forever. He doesn't invest to make a quick buck. Instead, he looks for strong companies he can own for decades, companies with durable competitive advantages and strong management teams. He often compares investing to planting a tree. You don't dig it up after a few weeks. You let it grow. This long-term mindset not only reduces risk, but also minimizes emotional ups and downs that come with market swings. Tip number 3. Buy wonderful companies at fair prices. One of Buffett's most quoted sayings is, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. He looks for businesses with strong brands, consistent earnings, and pricing power, like Coca-Cola or Apple. While he loves a good deal, he's willing to pay a fair price for quality. The idea is that a strong company will continue to grow and compound over time, even if you didn't buy it at the absolute lowest price. Tip number 4. Be fearful when others are greedy, and greedy when others are fearful. Buffett is famous for keeping a level head during times of market panic. When others are rushing to sell, he often starts buying. In 2008, during the financial crisis, while many were running for the exits, Buffett invested billions in companies like Goldman Sachs and Bank of America. Those bets paid off handsomely in the long run. His point? Markets overreact. And in times of fear, opportunity often knocks. Tip number 5. Avoid debt, especially when investing. Buffett is cautious about using borrowed money to invest. He's warned that leverage can turn a good investment into a disaster if things go south. As he puts it, if you're smart, you don't need it. And if you're dumb, you shouldn't be using it. Instead of chasing fast gains with borrowed money, Buffett advises patience, discipline, and living below your means. That way, you stay in the game, no matter what the market throws your way. Tip number 6. Index funds are a great option. While Buffett is a master at picking stocks, he recognizes that most people aren't professional investors. That's why he recommends low-cost S&P 500 index funds for the average person. In fact, he once made a famous bet that a basic S&P 500 index fund would outperform a group of hedge funds over 10 years. He was right, and the index fund crushed them. His advice? If you're not willing or able to study individual companies, invest regularly in an index fund and let time do the heavy lifting. Tip number 7. Focus on intrinsic value, not market hype. Buffett doesn't get caught up in market fads or media headlines. Instead, he focuses on intrinsic value, what a company is really worth based on its fundamentals. He views the stock market as a voting machine in the short term, but a weighing machine in the long term. That means prices can swing wildly, but value eventually shows up. Ignore the noise. Look at earnings, assets, and long-term prospects. That's what Buffett does. Tip number 8. Never stop learning. Buffett spends a large portion of his day reading. He once said, I just sit in my office and read all day. He believes that knowledge compounds, just like money. The more you read and learn, the better your decisions become. So if you want to invest like Buffett, don't just copy his trades. Copy his habits. Read widely, study consistently, and never stop growing. Tip number 9. Stay rational and emotionally disciplined. One of Buffett's greatest strengths is his ability to stay calm and rational, especially when others aren't. Markets go up and down. Fear and greed can cloud judgment. But Buffett doesn't let emotions drive his decisions. He sticks to his process, trusts his analysis, and avoids knee-jerk reactions. That emotional discipline is a huge part of his success, and it's something we can all learn to develop. Tip number 10. Reinvest your profits. Reinvest your profits. It's one of the simplest, most powerful habits in investing, and it's a big part of how Buffett built his fortune. Early in his career, Buffett bought a small pinball machine and placed it in a local barbershop. Instead of spending the profits, he bought more machines and placed them in other shops. That tiny business grew and the concept stuck. He's applied the same principle to investing ever since. Rather than cashing out gains or living large after win, Buffett lets the profits compound. He reinvests them into more high-quality businesses, letting time and growth multiply the value. The message is simple. Don't interrupt compounding unnecessarily. Whether it's dividends, business profits, or capital gains, roll them forward. Over time, reinvested earnings can turn small wins into massive success. That's how you build real wealth. To conclude, it's simple, not easy. Warren Buffett's tips are based on common sense. They're not flashy or complicated, but they work. That's the key lesson. Investing doesn't have to be complex to be effective. Be patient. Understand what you own. Think long-term. Stay disciplined. Keep learning. These are the principles that built one of the greatest fortunes in history, and they can work for you too. Thanks for listening. And remember, time in the market beats timing the market. Until next time, happy investing.